Right, so let me do not disturb everything. And let's go ahead and get started. Okay, I'm so excited to be leading this class today. For those who are new to this concept, I am going to be going over a couple different pieces on whether you should continue renting, which I'm assuming most of you are doing if you're joining this call, or if it's a good idea for you to buy real estate. I put together some really interesting material, and I was telling the girls before who joined this call early that I speak in mortgage terms a lot of the time. So I'm going to do my best to speak and articulate in a way that relates to all of you, but I am a super nerd. So we are going to be diving into some numbers and just some really interesting concepts today. So if you have any questions, please, please, please feel free to notate them in the Zoom chat. I can't see the chat box right now, but what we can do is we can do a Q&A at the very end of this session, and we can go through all your questions at that point in time. Let's get started. So a little bit of intro or background on me. Some of you may already know me. My name is Ashley McPoland. I am a mortgage broker, and I'm actually based in Orange County, California, but I'm licensed in a handful of states across the country. So what I do is basically my self-proclaimed title is I'm an educator. I love to teach people more about the home buying process. I am a mortgage broker, so what I do in that position is I shop for the best interest rate and loan product based on your financial scenario to get you the best deal. I have been doing mortgage for, in November, it'll be a decade, so 10 years, which is literally crazy to even say out loud. But my favorite way to market myself is Instagram. If you scan this QR code, let's connect on Instagram. And to any of the real estate professionals on this call, I do, again, work in numerous states across the country, California, Washington, Arizona, Texas, Florida, and Oregon. Would love to connect if you'd be curious to know more about my process. So feel free to send me a message on Instagram and we can connect. Brief overview of what we're going to go through today. I want to really focus on comparing renting and buying. There are pros and cons to both. And I'm not a real estate professional who is always going to push buying on my clients because, just to be totally transparent, it doesn't always make sense for you to buy. There are scenarios where it does make sense for you to rent, so we're going to go through those. We're going to do a comparison too of what each path will look like long term. We're going to tackle a really, I would say, big elephant in the room topic, which is how can we make the unaffordable, which is just the housing market in general right now, more affordable and attainable for you. We're also going to talk about what is the secret to getting the best deal. Because when I say best deal, most of you probably think of one thing that we will unpack later, but that one thing is probably not actually the best deal. So we're going to go through some more strategy to get you a true best deal based on your goals. And then how do I buy a home? I don't want to focus a lot on this today, but I'm assuming if you're on this call, you probably don't own a home. So I would consider you a first-time home buyer. I just want to give you a broad understanding of what you should expect if you do decide to pursue a home purchase. Objective. My goal, full disclosure, is just to educate. I said this earlier. I position myself as an educator because I want to provide you with all of the information that you need to know before you buy a house so that you can make the decision based off of your goals, whether it's going to be a good idea for you. Contrary to popular belief, I shouldn't say most real estate professionals, I know all the real estate professionals on this call I can speak for and vouch for. We are not pushy salespeople who are going to try to coerce you into buying a home. We simply want you to understand how to do it, when it's a good idea to do it, and what you need to do if you want to move forward with buying a home. So that's my goal today, is just for you to walk away with a better understanding of whether or not you can move forward confidently with buying in the market you're in. I do want everyone to keep in mind that I think we have people joining from all over the country. And I tried to make this presentation as, standard as possible, but there are subtle differences in every single market. And I'll kind of walk through what I mean by that as we go through every slide. Um, but just keep that in mind too. Some of the numbers might look different in your market, but I'm going to speak from very general terms today. Okay, let's jump into it. Renting. When does it make sense to rent? There are basically three scenarios that I've come across where I've actually told clients, take away from our meeting, it's probably not the best idea for you to buy a home in the near future. And these are the three reasons. First is short-term living plans. If you are someone who doesn't know where they want to settle down, and when I say settle down, typically, if you buy a home, you should plan to own that home for at least 3 to 5 years before moving on to whatever venture is next for you. If you have short-term living plans, let's say you're like a contract employee or a travel nurse, something like that, you're constantly moving around, and you're not super certain what city you want to settle down in, buying is not going to make sense for you. If you're planning on living in a place for 1 year and you're going to have to turn around and sell that home, you're probably not going to even break even on that investment because real estate is almost always considered a long-term investment. Affordability in certain areas. This has kind of become, it's a tough topic to talk about, especially considering a lot of the markets I serve are very big cities, which tend to be the more expensive cities. Seattle, Los Angeles, Orange County, Seattle, I already said Seattle. Phoenix even is becoming more expensive. Totally different depending on what market you're looking in, but in some cases, it honestly just might not make sense. If you are, let's say, single, you're living on your own, you're wanting to buy a 1-bedroom condo in, I'm going to just speak for where I live, Orange County, California, you're probably going to be looking at a price tag of $700,000 to $800,000 for a 1-bedroom condo, which means you're probably going to be paying $6,000 a month, something around there for that 1-bedroom condo. Is that going to make sense? I guess it depends on your long-term goals. How long do you want to live there? So on and so forth. But there are certain situations where I do tell clients it's probably not the best idea, depending on where they're needing to buy. The last thing is avoiding maintenance and responsibility. One of the benefits of renting is that if anything happens to the house you live in or the apartment you live in, typically the maintenance falls on the landlord. Let's say the dishwasher breaks or the roof needs replacing. You're not going to have to reach into your savings account and spend money on that cost, at least without getting reimbursed by your landlord. That's typically how it goes. If you don't have a savings set aside for maintenance and responsibility, this is one of those things where it's different case by case, but typically if I speak to a client and they only have enough in their bank account for their down payment and their closing costs, and they're going to be left over with $200 after they close on their home, they can do it. By all means, if that's what you want to do, you can do it. Do I suggest that? No, because you never know what's going to happen once you buy a house. So I always say, err on the conservative side, try to have anywhere from 3 to 6 months worth of expenses in a savings account after you close on your home. That's just my personal suggestion. Again, it's not required, but typically what I suggest. Renting does provide flexibility and time to save for homeownership. I don't know many people that don't have a long-term goal of buying a home someday. So renting is kind of that in between. With that being said, what I typically suggest for my clients is to try and keep the total amount you're paying in rent to be 30% of your monthly gross income. So for ease of math purposes, let's say you're making $10,000 a month. I would suggest to be paying no more than $3,000 a month in rent, because that will allow you to plan accordingly and set money aside into a savings account for that goal of owning a home. Now let's talk about buying. When does it make sense? And a lot of these are probably topics that you've heard people talk about, but I really want to elaborate on what they mean and what they should mean to you. Building long-term wealth. This is a phrase I hear all the time in real estate, but people don't quite understand what this means. Buying offers stability and builds equity over time. The word equity is such a powerful word in real estate. And if you don't know what equity is, I'm going to give just a brief explanation. When you buy a house, your equity is your ownership stake in the property. So again, for ease of math purposes, I'm just going to use a $500,000 house as an example. Let's say you buy a house for $500,000 and you decide to put $25,000 as the down payment on that house. Your mortgage balance is going to be $475,000. So that $25,000 that you put down on your house is your equity stake in the property. That's how much of the property you actually own. The bank technically owns the rest, right? Because you took out a mortgage. Well, as you pay your mortgage payments, your loan balance is going to slowly start to decrease. And as you just live in your home, it's going to appreciate, which appreciate means it's just going to gain value over time. So as you live in your home, the value of your house is going to slowly increase. The mortgage balance is going to decrease. This is called your equity. So that's going to grow over time. That is building long-term wealth because that's going to grow year over year in a healthy real estate market, which we should see. There's all the data pointing in a healthy market direction right now. So building long-term wealth, that's basically what that means. It's a forced savings account for you. Stability and security. This is a really, really big piece and one of the many benefits of homeownership. When you buy a house, you are going to be paying a fixed mortgage payment. I do have to give a couple disclaimers because year over year, when you do buy a house, there's two things that could potentially change your mortgage payment. One is your property taxes. Your county tax assessor, it's different in every state. So again, it's hard to really speak on this on a national level, but every few years, your county tax assessor is probably going to reassess what the current value of your property is. Because as I mentioned earlier, your property is going to consistently and steadily increase in value over the years. With that being the case, your property taxes might increase slightly year over year. It's usually not a lot though. Same with your homeowner's insurance policy. When you buy a house, you have to have a homeowner's insurance policy. That premium, that annual premium, might slightly increase year over year. But for the most part, your mortgage terms are fixed and are not going to change. So one thing that you can rely on when you buy a house is, for the most part, your mortgage payment is going to remain relatively similar to when you bought the house. Same cannot be said for rent, right? Year over year, typically your landlord is going to increase the rent on you by probably a few $100s. That's something you don't have to worry about with mortgages or with buying a house. When else does it make sense? When you have the financial readiness, the two pieces that I really encourage, I already touched on one of them, having a good amount of savings. I don't ever suggest for people to buy a house and not have any savings left over. So that's one piece of financial readiness. Second piece is 2 years consistent employment history. This is a really important piece that I don't think is talked about enough. When a lender looks at your financial profile, they want to make sure that you're a reliable person who's going to bring in a reliable income, because that's how they can guarantee that you're going to pay them back what you're borrowing from them. So make sure you have a consistent 2-year employment history. Doesn't mean you have to be working with the same company. Doesn't even mean you have to be working in the same industry, but just make sure to have a good 2 years under your belt. One piece of advice is you can actually use your college degree. If you're going into a specific career like engineering, you're a doctor or something like that, you can use your college degree as work history if you're getting a salary W-2 position after you graduate. Just a piece to throw out there. And then obviously personal goals. I don't think anyone on this call would be here if you didn't have a personal goal to buy a house. The reason I wrote that though is because you have to have that long-term mindset of knowing the importance of buying a house, because the numbers that we're going to go into, I'm not going to sugarcoat it. It can be intimidating because right now, just with how the housing market is currently, there is a pretty big gap between what you will be paying for rent versus what you will be paying on your mortgage payment in most cases. Um, so just having that long-term mindset of, there's a purpose for you buying and all of these reasons play into that. That's when you know you're ready to buy a house. Let's talk about the current landscape for the housing market. Right now, the average rent, and again, this is where it comes back to doing a national presentation. The average rent is currently $2,064. I know in most markets I serve, the rent average is probably way higher, probably closer to $3,000 a month. So keep this in mind. These are the numbers I'm going to be using today just for simplicity purposes, but it could be different in your market, okay? As of December 2024, the median home price in the US is $419,200. That is according to Zillow. And nationwide, home values typically increase by 3 to 5% each year. Could be different in your market. In the markets I work in, I see somewhere in between 4 to 5% year over year. And when I say the values typically increase, that just means how much your home price is going up. Hopefully that goes without saying. The most common objection that I get in the current market, or the biggest elephant in the room, I should say, is that interest rates are too high right now, and people want to wait for them to come down to buy a home. And that's not, for anyone who has that mindset, I don't want you to think that's like not realistic to think that way, especially with all the mainstream media that is out there. There's so much fear mongering going on with interest rates. But one piece of advice I would give to you is to focus on the monthly payment, because at the end of the day, if you're comfortable with a monthly payment, it doesn't matter what the interest rate is that's attached to it. I always tell my clients, when it comes to budgeting, interest rate shouldn't even be something that you're thinking about. It should always come down to how much am I going to be paying per month for this to make me feel comfortable. And I want to show you, this is where we get into the numbers. I want to show you an example of if you are to stick with that mindset of maybe I should wait to buy a home and wait till interest rates come down. I want to show you kind of what that would play out to. So let's review the numbers. In this first column, I put rent, $2,064. Again, probably different in every single market, depending on where you're tuning in from. But using the nationwide average purchase price of $419,200, if you're a first-time home buyer, you can buy a house with as little as 3% down. So I'm assuming you're going to do 3% down, the minimum down payment. Interest rates right now are hovering around 6.75. Mid 6 to high 6% is what we're seeing typically on average. So that's the interest rate I plugged in today. Your total mortgage payment, including everything, principal, interest, you have to pay something called mortgage insurance when you put less than 20% down. Property taxes, again, could differ state to state. I use 1%, which is the nation average. Sometimes it's higher, sometimes it's lower. And then homeowners insurance. Your total monthly payment is going to be about $1,100 higher than the average rent. And people are probably like looking at me crazy right now. I don't think I've had a first-time home buyer not look at me crazy when I go over these numbers with them. So that's totally normal thought. But let's say you want to wait. Let's say you're like, I'm not comfortable with this payment. I want to wait till rates come down 1.5%, which, by the way, full disclosure, no one knows what's going to happen to rates. Rates typically, at least historically speaking, usually level out between the high 4s and the mid 5s. Over the past 30 some years, that's standardly where we see them bottom out and level out. So I'm using somewhere in the middle. I'm using 5.25 as an example. I'm not saying rates are going to get there in 3 years. I'm just using it as an example. Let's say you waited 3 years to end up buying the same house that was once worth $419,200. That house is now going to be worth $458,000 because it's appreciated by at least 3% year over year. And with that lower interest rate of 5.25, your total monthly payment is still going to be about $3,000. So you're only saving about just under $150 a month by waiting for that lower interest rate. And this is when I start to see the wheels turn, because for clients that think it's better to wait for rates to be lower, this is like, oh, it's really not going to affect the payment that much. Now, what most renters don't realize, that homeowners do realize, is that you can refinance your mortgage after you buy your house. And the best way to describe refinancing is basically, imagine if you could renegotiate your lease with your landlord halfway through your lease term. That's exactly what refinancing is. It's renegotiating your mortgage terms when you're a certain amount into your loan. Depends on when it's a good opportunity for you. Essentially, what you would be doing is taking out a new mortgage to pay off the mortgage that you took out when you bought the home at a much lower interest rate. You're going to have about $60,000, $58,000 in equity at this time. And look at where your payment's going to land, $2,723. That's a total difference of just under $500 from that original payment when you bought it. So this is just one example. Waiting is probably going to drive up housing prices. You're going to have to save a little bit more for the down payment. The cash to close numbers are at the bottom. I crossed out the refinance one because it's not applicable. Not too different. You could still, if you were to wait 3 years and the house increased in value by this amount, $40,000, you would only have to bring about $1,000 extra to closing. So that number wouldn't change much, but the payment, if you were to buy now and refinance later, significant difference. Long term, you'd be saving more. Let's do a comparison too of where each path would lead you. Again, long term. These widgets are very long term. So rent versus principal paid in 60 months, it only gives me a 5-year calendar. But essentially, if you are following the national average rent increase, again, being conservative at 1.5% year over year, in 5 years, you're going to pay your landlord just under $130,000. And that money is just not going to anything. If you were to buy a house now and look at how much equity you've gained just from your mortgage payoff, this is not including how much your house has increased year over year, just including how much you put towards the principal balance of your mortgage, that's basically a forced savings of about $25,000. So instead of throwing that $130,000 out the window, you're again building your equity in your home by about $25,000 in those 5 years. Net worth in 15 years. Again, this is very, very long term, but if that house were to continue appreciating steadily at a conservative 3% rate year over year, this is where the long-term wealth comes into play. This is how people are retiring. This is why all the baby boomers who bought houses in, 30 plus years ago are able to retire, because they can sell their house and they're cashing in on hundreds of thousands of dollars that they've just built by living in their house. $355,000 is what you would have as equity if you were to just live in that house and pay your mortgage for 15 years, halfway through the loan term. Crazy to see these numbers. Now that we've gone over kind of the numbers of what it would look like to wait versus buy now, I also want to go over some strategy, because when I ask people, what does it look like for you to get a good deal on a property? Most people say, I want to offer at a lower price than what it's listed for. So for example, if a house is listed at $500,000, most people think, oh, I want to get a good deal. I'm going to offer $480,000 just to get a good deal on the house. But that's not always going to equate to what you think it's going to. And it's probably not even going to save you as much money in the short term and the long term as you think it's going to. Before we get into the numbers on that piece, I do want to go over a few ways that you could strategize in the current market. And again, I feel like a broken record. Every market is different. In a lot of markets that I serve, actually, no, every market is so different. Seattle is really competitive. California is really competitive. And Arizona specifically, I'm seeing a lot of this first and second option. So You're going to have to consult with a local realtor to get a better understanding of your market. But here are some strategies that I'm seeing in 2025. Seller concessions. And the best way to describe this is when you write an offer with either your realtor, or if it's an attorney state, if you're writing an offer with an attorney, there's a million different things that you're going to plug into that offer. And one of the things that you can plug in is the seller concession request. What this means is essentially you're asking the sellers to pay a portion or all of your closing costs on your home. All of your closing costs are eligible to be covered by the seller. And what you would do is you would basically write into the offer, seller to pay X amount to cover your closing costs. I'm personally seeing a lot of this happen right now. There's a really cool loan program with the high interest rate environment. A lot of banks and lenders are trying to get creative with making housing more affordable for home buyers. And so one of the things that they've done in the past couple of years is they've launched a new loan program. Generally speaking, it's just called a temporary buy-down loan program. But my personal favorite is called the 2-1 buy-down program. And I'm going to go deeper into this on the next slide of what it would look like. But essentially, you request the sellers to give you a seller concession so that you can pay a 2% lower interest rate the first year of your mortgage, a 1% lower interest rate the second year of your mortgage, and then the third year, your mortgage is going to return to the fully amortized payment at whatever interest rate you locked in at. Now, the goal for most clients is that they're not going to be locked in at your number 3 payment, and we're going to hopefully see rates come down to a more steady territory for you to refinance before you're even making that year 3 payment. Not a guarantee. You should always be comfortable with the mortgage payment you're signing up for when you buy the house. But that's the strategy behind this program, and that's what banks and lenders wanted to make available to consumers. Assumable mortgages, I am actually super curious to hear, before I explain what they are, do any real estate professionals have experience with an assumable mortgage, whether you were the selling agent or the buyer's agent? No.
No, I
You
don't.
assumable.
You've done an assumable?
Yeah, the majority of mine have been like VA assumable.
Okay, yeah.
Hmm.
I love hearing that because I personally can't speak on this because I haven't had clients actually do assumable mortgages with me personally, but it's such a great option for home buyers. Can you still see my screen? I just pressed a button.
Yeah, you can.
Okay, cool. So assumable mortgages are basically, they have to be government-backed loans. So typically this means they have to be either FHA or a VA loan. But if a home buyer bought a house, let's say in 2020, and they have a 2.75% interest rate, you can actually assume their mortgage and keep your payment exactly what they're paying now at that low interest rate. The only catch is that typically you have to cover the difference in down payment or cash. There might be lenders out there that give you a second mortgage to cover a portion of the difference, but in most cases that I've heard of, you have to have a pretty significant down payment to basically cover the difference. But nonetheless, really good option and really good opportunity to just be aware of so that you can keep your eyes on any of the listing notes because they usually include these details.
Ashley, we have a question regarding the assumable loans.
Yeah,
Ellen asked, you don't have to be a veteran to assume VA, correct?
no, you do not. The only tricky piece with that is that the veteran has to basically be willing. The veteran has a certain amount of allowance with the VA, and because they wouldn't be paying off the original VA loan, they would have to be okay with giving up that amount of entitlement. So that's totally like a case by case basis. But to answer your question, no, you do not have to be a veteran to assume a VA loan. Pretty cool. Okay, let's go into a 2-1 buy down just to give an example of how this could save you money. I'm going to use the example that I actually used earlier. Let's say there's a house listed for $500,000. And in your mind, you're thinking, well, I want to get a good deal on this house. Let's offer $20,000 under the list price and see what the sellers accept, or see if the sellers accept. This last column is exactly that. You'd be looking at, again, relatively speaking, interest rate in the mid to high 6% range today. Your payment is going to be about $3,392. If you were to ignore year one and year two column, if you were to do the same exact thing with a $500,000 purchase price, your fully amortized payment would be about $3,525. So the difference in payment, if you bought the house for $20,000 less, you would be saving about 100, what is that? 130 to $140 a month. Maybe in your mind, that's great. But I want to paint a picture of how the 2-1 buy down could actually benefit you better, even if you purchase it at a higher purchase price. So let's say you decide to pay the full purchase price of $500,000, but you requested from the sellers, I don't know what the exact amount would be. Let's just say $15,000 in seller credit or $20,000 to make it even. In year one, that would allow you to pay a 2% lower interest rate, which is 4.75. Your total monthly payment, again, with everything included that's required of you to pay, is about $2,900. Your year two payment, paying at 5.75%, would be about $3,200. Year three, you'd return to the fully amortized payment. And again, hopefully we'll see an interest rate environment like all of the analysts are expecting, where rates should trend down. Not guaranteed. That's just kind of what everyone's expecting based on all the market trends and data and inflation reports that we're seeing released in the current economic environment. Hopefully I explained this well enough. If there's questions on this, we can always revisit at the end of the presentation. Home buying process. I want to go over just a quick overview. Again, I don't want to get in the weeds of this, but just to give you an idea, if you are going to pursue buying a home, this is what you can expect. Step one, pre-approval. And obviously, I feel like a lot of people think to reach out to the realtor before the lender, which honestly, do that. If you have someone that you trust, obviously reach out to the realtor first. And they can usually point you in the right direction as far as consulting with a lender. But pre-approval always comes first because finances are so important. It's important to know your financials. It's important to check your budget because, again, just because you can afford something doesn't mean that you want to be budgeting that or for that every month. So that's why it's super important to step one, get your budget in order, talk to a lender who, again, is aware of what's going on in the market and get your pre-approval done. Once you do that, then you can start your home search. So this is when you connect with your realtor, you get a list and fine tune what you want to have in a property, and you can start touring homes. This process is this part of the process is the fun part. This is where you get to do all the tours and all of that fun stuff. When you find a house that you love and you want to offer on, this is when you're going to work with both your realtor and your lender to strategize your offer. So if you're thinking about doing seller concession, if you're thinking about doing a specialty loan program like the 2-1 buy down, this is where your lender and your realtor are really going to collaborate and work together to draft your offer to make sure everything is going to help you get to your end goal, whatever that is. Once you go under contract, the loan process is pretty straightforward. There might be some documents you're providing your lender, but most important things I would say, you're probably going to get a home inspection and an appraisal done. Those are all typically handled by your real estate agent or your lender. You can finally lock in your mortgage rate so that it won't change throughout the process. And then you're just going to have to sign a lot of paperwork. That's all you really need to know about the loan process. Typically takes about 30 days. I know you can close in as little as 2 weeks. At least I can help my clients close in as little as 2 weeks, but I feel like standard, again, tough speaking about nationwide, but standard I see is typically 30 days. And then closing, obviously you're going to sign all of your final closing documents. You're going to wire all of your cash due at closing on closing day, or sometimes the day before closing day, and then you get the keys. And then you begin your path to building long-term wealth. So this is pretty much all the information I wanted to go over today. Obviously, I feel like this is stating the obvious. Make sure to have a team that you trust, who you can work with, someone who understands your local market and can help guide you in the best direction. There's been a lot of changes in the real estate industry the past year or so, and I would argue that now it's more important than ever to just make sure you have someone representing you who knows what they're doing. Because I feel like the direction the world's trying to go in is everyone's trying to automate everything, but there's so much that you can miss out on if you're not working with a strong team who really wants to help you reach your goals. This is a map of, actually, Giovanna, do you want to talk on this piece? This is a map. All the green is where I service. Just to reiterate, Washington, Oregon, California, Arizona, Texas, and Florida. I'm hoping to add more states to this list at some point this year, depending on the requests I get. But it looks like there's a lot of areas that are covered by the Powerhouse Women agents.
Yes, I was just gonna say you need to put at least 40 something more states on that list of yours, because Powerhouse Women is at its core. It started as a group of real estate agents across the country who were just looking for female real estate agents in particular, who were looking for more community and collaborative support from other agents, and it has now blossomed into this. We have 45 or 46 markets that we cover at this particular point in time. We're always growing and adding more states to that list. So if you scan that QR code on Ashley's slide, that will take you to our website where you can basically see our whole roster of all of our different market partners. But whether you live on the East Coast or the West Coast, or even though we have some of those middle states not filled in yet, odds are we know somebody there. They just haven't signed up to be a market partner yet. So feel free to reach out wherever you are. And between Ashley and all of us, we can help you out.
Yes, I love that. So cool. So cool. It's funny, all of these states that are blank too are states that I don't think my company is licensed in. I think we're in, I'm so bad at geography. I think we're in Montana, but
Okay.
a lot of
Yes,
other-
that is Montana. You
yeah.
need to give us a recommendation for an Oregon market partner. We
Oh,
don't have
yeah,
anybody there, so
I
I'm sure
do.
we'll
I
have
have
a good partner.
I'd love to get you guys connected. Okay, I guess if anyone has questions, we can just open it up for Q&A now. Did anyone say anything in the chat box?
Yes. Zoe asked, what goes into the refinancing decision if it's approved slash not?
That's a great question. So when you do a refinance on your mortgage, it's going to essentially be the same process as when you bought the home. You're going to have to provide your income documents. In most cases, you're going to have to provide your income documents, typically not assets. Like, you don't need to show that you have money, because obviously you're probably not going to be bringing money to closing like you would a down payment. But employment history, income documents, credit, your interest rate's always going to be based off of your credit score whenever the lender pulls your credit. And then process, the only difference really between a home purchase and a refinance is that a home purchase has a definitive closing date. The thing with the refinance is your closing date is kind of whenever you want it to be. So closing date can be up in the air. Typically, refinances, again, take about 30 days to complete. But it also depends on your goals and how quick you want to move. It's a lot more flexible than when you buy a home. I hope that answered the question.
That was a really good question. Does anyone have any other questions?
I feel like you went through everything so seamlessly. Nobody has questions now.
Yeah. Oh my gosh, that makes me happy.
Something I just wanted to add to the end is I think people don't realize how important the team, especially the agent and the lender working together, how valuable that is to clients. There are deals that I will put under contract that will beat out cash offers simply because of the lending and real estate team that you have together. Don't overlook that. Make sure that they have either worked together in the past or can form that relationship. It goes a really, really long way, especially when that kind of relationship can beat a cash offer. That's invaluable.
Yeah, wholeheartedly agree. And it's little touches too, right? Your lender should be doing things like calling the seller's real estate agent to endorse that you are a very well qualified buyer, giving them details on your loan, making sure your loan is pre-underwritten, which is also another way to stand out in the market. Having an underwriter at the lending company review all your financial documents, review all your credit documents, review your bank statements to make sure that they're not going to run into any hiccups in the loan process. So there's a lot of extra steps that can be taken that are so, so important in the current market.
Echoing what Morgan said, that was so incredibly thorough. Something I would love to hear your take on that. I feel like a lot of people get kind of like, oh, when I talk to a lender, like I hear it on the real estate side. People assume that the second that I speak a word to them, like you're buying a house, we're putting in
Yeah.
offers, like they're nervous that, if I speak to a lender, like all of a sudden, like I'm going through with the pre-approval process or like talking about finance. So can you speak to like somebody finds you, like reaches out, they're not necessarily ready to get pre-approved, but like what kind of conversation can you have with them just initially when they
Yeah.
think about this stuff?
So when it comes to, I will say every lender is a little bit different in this regard, but I will speak to what I do with my clients. Typically, I take them through like a 30-minute, it's literally just like we're doing right now, Zoom consultation. We're going to walk through all of your financial details to the best of your knowledge. This is not like a loan application. We're not pulling your credit just based off of everything you know, how much money you make, broad understanding. I want to get a broad understanding of what you do for work, how long you've been doing it. Just talk about where you're at currently. We're going to talk about your savings. If you don't have savings, what's your savings goal? With all that information, we're just going to put together a plan. Whether you want to buy in 6 months or 3 years, we're going to kind of get together, put our heads together, develop a plan for you to follow. If accountability is something you're looking for, that's another thing. We can set up regular meetings. Like I have a girl right now who we've been meeting for 2 years quarterly. And every quarter I check in with her and I'm like, what's your savings balance at now? But it's totally customizable. I feel like it is to your point. A lot of people are very intimidated to speak to a lender, but it doesn't have to feel intimidating. But at the same time, there are professionals out there that that's how they operate. They don't want to do the initial consultation. They just want to take your loan application and send you an email. So it definitely depends on who you're working with. But I'm always happy to be a resource. Let me put my QR code back up for my Instagram. If anybody has questions, even if you're in like a state that I'm not licensed in, I'm happy to answer any questions that you have. So feel free to send me a DM on Instagram. Um, and I would not be opposed to hopping on a quick phone call with you.
I love that. And you do have lender partners in other states that you're not licensed in.
Yeah,
So if somebody is interested, you can make a recommendation for them.
definitely.
I love it. This was fabulous. Like,
Oh, glad.
So good.
I can't wait to like send this recording to all my clients
Oh
after.
my gosh. Honestly,
Yes.
I want the link. I want to watch back and see. So I'm like, I think I blocked out, you guys. This is my first presentation. And the nerves, the jitters, they always get to you.
Well, this
So
was
I'm
so
glad it was
Helpful.
impactful.
fabulous. Well, unless anybody has any other questions, we can wrap up. And as always, the recording is going to be on our Powerhouse Women website, and we will be emailing it out to everyone who attended this call so you can rewatch. And of course, Ashley and all of us are always here if you have any questions about real estate that we can help you with.
Yes.
Thanks.
Yes, thank you.
Thanks, Ashley.
Of course. Thanks for
Thanks,
having
Ashley.
me. I'll come anytime.
Yeah, no, I feel like we need a part two at some point, like for sure. This is all great, great information. So you rock. You're a rock star.
Maybe we could do like a sell or rent.
Yes.
Yeah, like, should I
Yeah.
sell my home to buy a new one, or should I rent it out and then
Oh,
buy a
I
new
love that.
Yes. I
one?
have a few clients I want to invite to that, so let's do
Yeah.
that.
Yeah.
Yes, let's do it. I love it. Oh my God, I love it.
I'm
Awesome.
done.
That's such a good idea. Thanks again, my girl. I'm gonna go ahead and end the call. So we'll end the recording.
Sounds good. Have a wonderful rest of your guys' day, and I'll talk to you soon.
Bye, guys.
Bye.
Bye.